economic factors that affect price in the market. Price of stock, price of index, and that affect the overall economy. So if you're an investor, you need to be aware of those factors before you put on the trade, before you take profit, before you buy stock, before you sell your stock. You need to pay attention to those factors. Unemployment claim or jobless claim is what we call is the number of people, of individual who file for unemployment insurance for the first time during the last month. What is that? Let's say you lose your job in February. Today we're in March. That's mean you're going to file unemployment claim in March. So if you already on unemployment, they don't count you. They only count the new people that just file for unemployment. That's we call unemployment insurance. Okay, this is for the first time. Now we in March. In April, then a new number will come out. Do we have more people is filing for unemployment, or do we have less? So if you have less, that's good for the economy. If you have more, that's not good for the economy. Why is that? When you have more, that means the companies are laying people off. That means the economy might be going through a downturn. Okay, so we have to understand that. But if the number of unemployment insurance decreases, now we know that more people stay in the job. That means they're gonna have income. That's why we need to know what is the unemployment claim. When you are looking at the monthly numbers of the unemployment claim now, you can understand what's going on. So why is it important? Although it is generally viewed as a lagging indicator, the number of unemployment people is an important signal of the economy, because consumer spend is highly correlated to labor condition. We saw that when we were talking about unemployment rate. So because we know that the consumer spending is highly related to the labor market, that means people who's looking for jobs. If people are losing their job, and we already have people looking for a job, that means more people will be unemployed. That means the unemployment rate will increase. So even though it's a lagging indicator, it gives you a signal that the economy is not doing too good. This is, we say, overall health of the economy. If this numbers continue to increase, that means each month it's increasing. That means more people gonna be unemployed. That means more people, they're not gonna have income. They're gonna depend on the government. This is not good, because when that happens, the government, how does the government get money? They have to charge more taxes. This is not good. So unemployment is also a major consideration for the Fed, for Congress, for the Senate. That's not good. When there's election, they don't want this number to continue to increase. Okay, they want to have good news in the economy. When there's elections, the Congress, the Senate, the government want good news. In the Fed, when there is good news, they keep interest low, right? So the economy is good. There's no inflation. Price is not increasing. The Fed can keep interest rates at a certain level to balance the number of employment, because the job of the Fed, as you know, is to have full employment, but also to keep inflation low. So that's mean the interest rate got to stay at a certain level to have that balance. This is why you and I, as investors and traders, we need to pay attention to those numbers and understand that they give you signal. If the unemployment claim is coming out, you need to pay attention, because price will move. It might not move that much, but it might move 200 points. If you're trading index, if you want trading currency, it might increase 50 to 100 points, or pips they call it. So you need to be aware of that. That way you don't put a position right before right before this report come out, right before the time. And if you put one of those position, you might be in the losing hand. So make sure you pay attention